What's going on, everybody? Welcome back to the channel. Today we're going to be discussing this big bet that I placed on the market. So I recently just opened up a long call option position on the Qs, the triple Qs. So QQQ is an ETF that tracks technology. So our top technology companies are going to be in this basket or in this ETF. So I want to run through the reasons on why I placed such a big bet, why I felt so comfortable placing this bet, and just why I'm willing to take this risk. So let's start off with us being on Yahoo Finance here. So we're on Yahoo Finance. I got the triple Qs pulled up, and we're currently having a positive day. The Qs are sitting at 462. We're up $8. And the reason the market's going up today is, we're dealing with all this tariff news and the president. And first off, when I started talking about the president, I'm not here to discuss politics. I'm here to discuss profits. So let's just get that out of the way. So the president has put a pause on tariffs, a 90-day pause on tariffs. So that's that got us his first initial bump up here. But specifically today, there's allegedly this list of certain things in the technology sector that are going to be exempt or maybe partially exempt for the meantime until they figure out what they want to do with the tariff situation. So a lot of things like computer chips, phones, things of that nature are on that list right now in computers themselves. So, but that's not even the real reason why I'm bullish or think that the Qs will go up over time. But it's just just the perfect storm here. So I bought this call option saying that the triple Qs will be 440 by December of 2027, right? And so one thing that has me confident is I like to have the Bollinger Bands on my chart, and when the share price dips below the band, you normally see it snap back in. And I know if you're a returning member of the channel, you've heard me say this before. When it comes out the top, it goes back in. When it comes out the bottom, it goes back in. And we definitely went out the bottom here. So that was one thing for me there. I like to buy my calls at the bottom part of the bottom Bollinger Band or below this midpoint line here. So that's one thing. And then we were roughly, when I placed this call, we were, I don't know, somewhere between 15 and 18% down on the index. And, we were approaching crash territory, some that's, 20% and above as far as being down from the all-time highs. And we were in that area. And normally when we see that usually indicates like a good buying opportunity. Also, too, the volatility index itself was elevated. It was way past the 50s. And I'll make a separate video talking about fear and greed and volatility, stuff like that. But that metric was super elevated, which if you go back and look at history, just tells us that's a great time to buy. And also I'm looking at this too, is like all-time highs for the Qs was around this 540 level. I placed a 440 call, and it goes out for 2 years. So think about this for a second. This is truly based off speculation, but we know that our president of the United States is a person that likes to show his list of accomplishments. And from my thought process is, it'll be hard for me to believe that we can go 2 years and not at one point in time during his tenure, at least in the next 2 years, that he can't say, hey, I got the market to all-time highs. So I'm looking at that and I'm like, come on now. He wants that as a check mark on his win column. Like, I know he's trying to get more favorable trade deals. I know that's his priority. But when everybody start coming to the table and we got all these deals that are more favorable to the US, I think he's going to turn more of his attention back to the stock market. And I think we've already kind of seen that. Because let's be honest, I'll say the quiet part out loud. You know, he has a lot of rich friends, right? And so he does not want to piss them off. Let's just be honest. So there's a lot of people that, you know, put a lot of money towards the campaign, this, that, and the third, and they want to get their return on investment, and I feel it. I mean, shoot, if I was the president, yeah, I'm going to make sure the homies get a bag, but, you know, that's neither here nor there. And also, too, is like, where are we headed? As long as we survive this trade war or these tariff concerns that we're dealing with right now, as long as we survive that and we see that inflation is under control, the Federal Reserve, they're not even activated yet. They're just kind of sitting back on the sideline watching, right? So the Federal Reserve will come in and eventually lower interest rates. Like once they see that inflation is under control and they're confident about it, they're going to lower interest rates. And that's going to increase spending. Like people, the money velocity is going to increase. People are going to want to spend more. I know, like, you know, I have a nice house, but me personally, if the interest rates were, you know, closer to 5, because right now I have a 3% interest rate, I'm not going to move right now. But yeah, you give me interest rate, you know, in the 5s, I'll be willing to move. So, and that's just me. So, the Federal Reserve, they're still haven't been activated yet, and that'll be something that really boosts the economy as well and boosts spending. Companies be able to borrow money at a lower rate. So that combination of all that and where we are in this cycle, and I'm not saying we can't come back and retest. Like if we come out with some news that people don't want to play with us, you know, in the sandbox, we'll see the market dip more. But I'm thinking this too shall pass, right? This too shall pass. And if that's the case, I'm just confident being a buyer in this area. It's hard for me to believe that we're going to be in this same area 2 years from now. So let's go and hop over and look at the actual position on Webull. Okay, we're over here on Webull and I have the public account pulled up. As you can see, I got a current balance of 20K in the account. This is the long call that I placed here. It cost me $9,700. As of right now, we're having a good day, but we're up $800 on the position. And yeah, you see the position ratio. I don't normally advise. So let's get this straight. This is not financial advice. This is just some random guy on YouTube talking about what I'm doing, what I'm buying, and I'm just trying to build this account up as much as I can. So I definitely do not recommend going this heavy on options in your account. Like I normally like to keep this number around, you know, 10, 15, and aggressive 20%. But I just feel it. I feel very confident in the decision I just made. Yeah, so I actually placed this trade maybe last Thursday at this point. And so, you know, it was down originally, but then had 2 good days in Friday and today, which is on Monday. And as we can see the current price right now is going for a 10.5. So when we just look at the QQQ call, it's the 440, December 17th, 2027. So that's a long time. And I like that. I like to go out further in time just to give myself more time to be right. And the good thing about it is, if I want to take this $800 right now, I can cash this position out. So along the way, I can cash out at any point. I don't have to hold until the very end. And honestly, you don't want to hold your options until the very end because you have theta decay that eats away at your profits. So let's go to the options chain just so I can show you what I was looking at and just a little bit more about the option. All right, so we're over here on the options chain. We have just calls pulled up. As far as like the time frame I went out as far as I possibly could, and that takes us to December of 2027. So at the time of this recording, I have 977 days to be in this contract. So that is plenty enough time for my thesis to play out. And I don't know how long I'm going to hold this. You know, usually when I'm in 2-year position, I expect somewhere between a 250 to a 500% return. Honestly, I think this one can actually be even higher if we get back on track and, you know, we have more certainty in the market. So I'm feeling really good about where I am. But let's dive deeper into the actual position itself. So on these on the option chain here, you can see this shaded area in purple. This let us know that the call option is what we call in the money. So if this was to expire today, I would not lose money. I'll put it that way. So that's what this signifies here. So we have strike prices, so different prices we can select. And so I chose the 440. So I said QQQ, which is the technology ETF, would go to $440 by this date, December 17 of 2027. Okay. And then when we look at the delta, especially when I'm picking 2 years or anytime when I'm doing options, I like to have a delta of 0.65 or higher. And in this case, it was like when I first placed the trade, it was like 0.7, kind of looked like one of these right here, but it was like 0.7. So the good thing is each dollar move up or down, the delta also adjusts. So as we move past 440, this number is going to increase. So as we approach that 540 all-time high, this number may go to 0.8. I'm just making this up. It may go 0.8, 0.85, 0.9, you know. And this tells us for every dollar move that the underlying stock makes. So if QQQ go from 440 to 441, I get $70, you know, roughly speaking. So, but we're actually past that, so I'm making a little bit more than that. But that's the premise of this. But it also doubles as a percentage chance. So this is telling me that with this call option that I bought, there's a 71% chance, because options are dealt in, it's a 71% chance that this contract will expire in the money. And options are dealt in kind of lots of 100. So one contract controls 100 shares. So when you're doing the option math, you just move the decimal over to the right 2 times. And then we see the theta here, which is the time decay. So delta and theta, in my opinion, are the most 2 important factors when we're looking at options. So you see here, 1, 2, 0.1. So that's the amount I'll lose on a daily basis, right? And when we're in these long calls, we see the delta is very, very small. So that's why I like to go out longer, because the theta is very small. And so that's why I like to go out further in time, because theta is a bit of a non-factor. And you'll see 45 days until expiration, this theta number really kicks up and really starts eating away at your profits. Yep. So as you can see, you know, currently up $750, around $800 today. So I'm going to hold on to this thing. And if you guys enjoyed the video, please leave a like, comment, subscribe if you can. And until the next time.